Hi guys, good morning. You're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Asian markets trade muted as investors shift focus to the conclusion of the Federal Reserve's June meeting later in the day. The Fed is expected to raise interest rates for the second time this year in its policy meeting that concludes today. Sun Pharma receives a clearance from the US Food and Drug Administration for its Halol manufacturing facility in Gujarat. And news on the economy, consumer price inflation rises to a 4-month high of 4.87% in May, and industrial output growth rises to 4.9% in April. Now, heading to the US markets, a historic summit between President Donald Trump and North Korean leader Kim Jong-un was great news, but a joint statement that was issued was light on the details, seemingly leaving the US market in wait-and-watch mode. Focus now changes to the Fed announcement, which is due later today. Abigail Doolittle of Bloomberg News wraps up all the action on Wall Street in this report.
It was a mixed finish for the major averages in Tuesday's Wall Street session. The Dow fell fractionally. The S&P 500 climbed by about 0.2%, while the tech-heavy NASDAQ not only outperformed, rising by about 0.6%, the NASDAQ put in a record high. But all of these moves are relatively small, considering that we just came out of that G7 weekend, plus more recently that historic summit between the U.S. and North Korea, and ahead on Wednesday, the Fed's policy rate decision. So lots happening, but the market's not moving too much about it. Some investors are wondering whether there will be some sort of catch-up reaction. But again, on Tuesday, relatively small and mixed moves from the major averages. Sector-wise, it was a pretty even split, nearly even split. Six sectors traded higher for the S&P 500 out of 11, 5 lower. On top, the utilities up about 1.3%. On bottom, energy down about 0.75%. Tech was another top sector, with Twitter leading the way, up 5% as JP Morgan raised its price target to $50 per share, matching the current street high. Also higher, and the top point boost for the tech sector, Apple, Alphabet, Facebook, and Microsoft. So overall, with stocks higher and haven bonds and the yen lower, there was certainly some risk appetite demonstrated in Tuesday's Wall Street session. But very interesting, Bitcoin down for a third day in a row, losing about 15% over that time period, falling to its lowest level since November of last year, trading right around $6,500 per Bitcoin. In New York, Abigail Doolittle, Bloomberg News.
Well, in Europe and the US, focus is on central banks for now, but immediately there's going to be a focus on the FOMC meet, which ends later tonight. While hardly any economist polled by Bloomberg expects the Fed to keep rates unchanged, they differ on the pace of hikes in the months to come. Kathleen Hayes of Bloomberg News tells you what to expect from today's meeting.
Are they going to push over that evenly divided 6 versus 6, saying 3 hikes or 4 hikes in total this year? Are the hawks going to carry the day, saying, we got to be prudent and move ahead before inflation rises? Or are the cautious doves going to say, no, you're going to be too restrictive, too fast, and mess things up? But I just want to put up several charts, our GTV library charts. The first one is looking at GDP growth versus Core Pce, and I think it just simply states kind of the broad picture. You've got the latest reading of first quarter GDP up to 2.8%, but you still have the Core Pce down around 1.8. This is supposed to move higher. Will this move higher as well? That's one of the things the Fed is considering. And of course, the problem is the economy is stronger, but wages aren't rising. So let's look at this one. We're going to look at this one. Unemployment versus wage growth. Unemployment down to 3.8%. Wage growth, average hourly earnings stuck are in this like 2.6 to 2.7% range. So bottom line, I think the tiebreaker is the Fed wants to make sure inflation gets sustained at 2%. I think that's the argument led by Jay Powell that may lead win the day for no change in the outlook. 3 hikes total this year.
Now, talking about the Asian markets, only 2 out of the 3 early risers in Asia are trading today. The Japanese benchmark opened the day positive, and you also have the Australian benchmark in Sydney that was trading negative, so they were heading in opposite directions. The Kospi, that is the South Korean market, is shut today. Waiting for a little more information with regard to the markets that have opened up right now. The Shanghai benchmark is currently trading in the red, about 0.5% in the red, and you also have the Hang Seng that is trading about 0.4% in the red. So it's starting off the day a little negatively, more red than green in the session in Asia so far. But Darshan Mehta is here to tell you what to expect with regard to India and all the cues that he can tell you about in the futures and options space. Darshan, how's it looking at the start of trade today?
See, Alex, at this point of time, it's looking rather muted. The SGX Nifty is muted, commodities are muted. Let's first start with how the ADRs panned out in trade to get an indication. So IT did well, Pharma did well. So Dr. Reddy's managed to surge 4% after the 5% that we saw yesterday. Infosys and Wipro did manage to move up post the TCS announcement of a buyback. So IT will be in focus, Pharma will be in focus. HDFC Bank, after many days of fall, managed to gain significantly in trade. It was up almost 1% in trade. Vedanta was the only one which was down in the negative, and that also marginally. Apart from it, ICICI, Tata Motors also rather muted. Now the SGX Nifty is indicating a negative outlook. It's down almost 19 points in trade currently. So the start pretty much will be muted for our market. Now the other factors that you need to watch out, how did the Nifty, the Nifty was up almost 0.5%, but more buying seems to happen on the broader side. The mid cap and the small cap also reacting positively to the cues that have come in. The Nifty Bank was up 0.5%, but look at the Nifty PSU Bank. That's been had a very, very strong rally. It's up almost 2.3%. So there is enough traction that's happening on the Nifty PSU Banking Index. The gaining indices yesterday was the Pharma Index, and probably will be again today post the EIR for Sun Pharma's Halol plant, and the Nifty PSU Bank Index, which was up almost 2.3% in trade. Now, as far as the loser is concerned, metals over the past few days has run out of steam, so that one was down almost 0.5% in trade. Now the other overall mix as far as the month-to-date performance is concerned, Pharma Index continues to outperform this month. The PSU Banking Index did extremely well, so it wasn't there over the past few days, but because of the rally yesterday, it's up almost 4% this month. And the Nifty Energy Index, led by Reliance, which closed at its lifetime high yesterday, was up almost 3% in trade. Some of the indices which is not doing well, the infra stocks are not doing well, the small caps are not doing well, and the Nifty Bank is not doing well, despite the PSU banking stocks doing extremely well. Now, as far as the year-to-date concern is concerned, money again continues to flow into the defensive. IT Index again will move back today up on the higher side because of the TCS buyback, and it's been outperforming the benchmark indices. What hasn't done well? High beta counters. PSU Bank, despite the rally that we saw in this month, it's yet down 16% on a YTD basis. Real estate and small cap are the other indices which are down in trade. Now, as far as the stocks at a lifetime high is concerned, and this seems to be increasing every day. So Bajaj Finance did well, Bharat Financial did well, First Source has been doing extremely well. Surprisingly, among the MNC pharma name, Glaxo has done extremely well. HUL, Godrej Consumer, again the FMCG play. Infosys is at a fresh lifetime high, and tomorrow it completes almost 25 years as being a listed entity, so something is expected there also. And P&G Hygiene also at a fresh 52-week high. Tata Elxsi, UBL, VIP Industries. So the list is extremely strong, but on the losing end, you just have one counter at a 52-week low, and that is quality. So the market seems to be moving on the other side at this point of time. Now, fund flows, FIs remain net sellers, DIs remain net buyers. So on a month-to-date basis, FIs have just bought in 1,580 crores, and mainly this is on account of the HDFC block. So if you remove that, money seems to be on an outflow from the FIs. DIs are bought in close to 5,000 crores in the cash market currently. Now, as far as the Nifty was concerned, it was up 56 points. What contributed? Reliance was the main contributor. TCS was the main contributor. So again, these counters you need to watch out for. Infosys on the lower end, Tata Steel also on the lower end. So that's what's happened on the Nifty side. But on the FNO side, what we saw was there was fresh buying that was seen on the market. Open interest build up was 2% on the FNO side, on the Nifty side. On the Bank Nifty side, if you're looking at it, 3% open interest build up on the long side. Now, where were positions taken yesterday? Yesterday, put writers again aggressive at 10,700 and 10,800. So there seems to be very, very strong resistance support level that the market is seeing at this point of time. If you bring up the total open interest, you can come to know the companies in the FNO ban, Dewan Housing and Balrampur Chini are the two counters in the FNO ban currently. The new company that comes in is Just Dial, which comes in. Jet Airways remains in the FNO ban. Now, as far as the put call ratio is concerned, that managed to inch up significantly to 1.59 on the Nifty. Even on the Bank Nifty, the Bank Nifty PCR also managed to come down up to levels of over 1.0, over 1 level at this point of time. Now, as far as stocks are concerned, Tata Elxsi fresh lifetime high, open interest build up of almost 30% on the long side. You have granules, which saw open interest build up of 4% on the long side. Pharma stocks again will be in focus today. You had Just Dial, which saw 17% open interest build up on the long side and has come in the F&O band. And finally, you have counters like Lupin, which saw fresh buying on low open interest build up of 2.5%.
All right, thanks so much for that, Darshan. Let's take a quick check on the macro news that came in last evening, a week after the RBI cut interest rates, raised interest rates by 25 basis points. Consumer price inflation rose to a 4-month high in May. Industrial production output essentially rose by just a little bit, came in at 4.9% as well. Ira Dugal sums up all the key macro data that's come in this report.
The monthly economic data has thrown up no surprises, both on inflation and on the industrial growth front. In a month where we've seen the first rate hike in nearly 4 years, perhaps we should start with the inflation picture. The consumer price inflation index came in at 4.87% compared to 4.58% in April. This 4.87% is more or less what Bloomberg forecast had suggested. It's also in line with the RBI's own forecast. They are expecting inflation to stay close to 4.8 to 4.9% in the first half of the year. So this index level seems to suggest that it's going as per plan. Let's talk a little bit about core inflation though, and the core inflation, which economists are now watching, which strips out not just volatile food and energy, but also items like transportation, which get impacted by some of those volatile energy prices. If you take that core inflation, that continues to be elevated at 6.17% based on the calculations of India rating. So essentially it is telling you that there is some sort of underlying inflation pressure that is building up, even though you haven't seen dramatic strength in growth, and we'll get to that in a minute. If you're looking at the internals of the inflation number within the food category, there is relatively elevated inflation in the fruit side and on vegetables. Fruit inflation at about 12%, vegetable inflation at about 8%. Some amount of it could be linked to summer impact. There have been some supply disruptions as well, which could continue to play a part in the May and in the June numbers. On the flip side, you continue to see deflationary pressures in the pulses segment and also in sugar, where prices are slipping right now. Fuel and light inflation at about 5.8%. That, of course, moves in line with what's been happening globally on crude oil prices. So that's broadly the inflation picture, not throwing up anything that makes you question what the MPC did, which is raise rates by 25 basis points. If you move to the industrial output numbers, not very strong, 4.9% industrial growth in the month of April. Within that, mining saw about 5%, manufacturing about 5%, and electricity was weak at about 2% growth. Fairly comsa in terms of the number of industries that grew and the ones that degrew. 16 out of 23 industries in the manufacturing segment showed a positive growth. The good news is that whole capital goods, capex story seems to be consistent with the data releases. So you've seen 13% growth in capital goods. You've seen 7.5% growth in the infrastructure construction category. So that's good news. If you're looking at the consumption side, consumer durable growth was at 4.3% and non-durable growth was at about 7% or so. Just mentioning two individual industries which have shown one very positive growth and one negative. One is the commercial vehicle sector, which saw more than 90% growth in this month. I don't know if there's a base effect built in. There probably is, but it is again consistent with the fact that there is activity happening in mining. There is activity happening in terms of some slight capex, all of which would mean strong demand for commercial vehicles. And then on the flip side, you've seen sharp degrowth in the jewelry segment, and a lot of people continue to blame that on what happened with the Nirav Modi episode and the impact that has had on the gems and jewelry segment.
All right, let's shift focus to commodities now, and Jayesh Khilani is here with all the details there. Morning, Jayesh. What are you looking at this morning?
Morning, Alex. Let me start off with oil prices, which are currently trading on the lower side, more than 0.5% lower after a 0.3% gain on the in the overnight session. Now, this is largely on the back of a surprise inventory buildup that we saw. So the US crude oil inventory actually rose about 8.3 lakh barrels for last week as per API, whereas the Bloomberg survey did indicate that we will see a decline this time around, but that was not to be. Also, Citigroup now expects that the OPEC and its allies are set to revive about 5 lakh barrels per day of the halted supply. So we'll have to wait and watch how this entire situation actually pans out. As far as base metals are concerned, most of them closed mixed, with the index declining for a third straight day. Aluminium continued to rise for a second day on the back of supply uncertainty. Lead, closed unchanged. Copper declined for a third day in a row, while nickel posted, fifth day of loss. We had zinc and tin, which also declined marginally. As far as gold prices are concerned, we saw some bit of decline ahead of the central bank meetings that are scheduled for this week.
All right, thanks so much for that, Jayesh. Now, on to the big corporate story from last evening. In much awaited relief for Sun Pharma, the US drug regulator has given an all clear for its Halol facility in Gujarat. This could pave the way for fresh approvals for its products in its largest market. Now, Darshan Mehta has been tracking this since the warning letter was issued in 2015. Is here to tell you exactly what that means for the company. Darshan, it's been a while and they've been working on it for some time. How does this benefit them? And also, it should give some legs to the pharma rally.
Yeah, it could, because see, there are a couple of things. First of all, the problem started in 2014 when they got a Form 483 with 23 observations, and that is where new approvals stopped coming in from the Halol plant. It's one of the largest plant. At one point of time, it was the largest plant, and this was ahead of the Ranbaxy merger. At one time, it was almost more than 20% of the US sales, and almost more than 11 to 12% of the total sales of the company. But since prices have come off, prices erosion has happened, and the merger with the Ranbaxy that has happened, the contribution has come down significantly. It's just close to 4% of the total sales currently. Now the thing is that all the important filings, especially on the injectable side, are filed from the Halol plant. So that is something that you need to watch out for. So from 2014, when they got a 23 observations, then again in 2015, what happened was they got a warning letter. Then there were subsequent inspections by the US FDA, wherein they got in 6 observations. The last one was in last year, where they got 3 was this year itself when they got 3 observations. What happened a couple of days ago when the stock did manage to rally was the US FDA changed the status of the plant to a voluntary approved VAI, which means that the plant was almost cleared for them, and that is why the counter rallied. Now they got the establishment inspection report, which means that the plant is totally clear. Now they will have to wait for the warning letter to be lifted, which is a matter of time before again approvals start coming in. So this definitely benefits Sun Pharma. Most of the analysts on the street have written that it's priced in currently, and the future depends on the specialty portfolio of the company, what exactly is the growth pattern of the company. Also, just a more word, Spark will also benefit significantly, because 2 of their key drugs which were getting stuck, Zelpros and Ellipsia, both of them will get the approval, will actually start manufacturing once the warning letter is lifted.
All right, thanks so much for that, Darshan. Let's move on to another story, this time in the insolvency space. Adani Wilmar has been identified as the highest bidder by Ruchi Soya's lenders. Patanjali might just get a chance to challenge that, though. Vishwanath Nair tells you how.
The committee of directors for Ruchi Soya have identified Adani Wilmar as the highest bidder for the company under the insolvency and bankruptcy process. Now, according to what sources are telling Bloomberg Quint, Adani Wilmar has offered to pay about 4,300 crore to the banks involved in the Ruchi Soya case, while also promising to infuse about 1,714 crore worth of equity capital at a later date. This bid was higher than what Patanjali has offered in the same case, where it has said that it will pay back the lenders about 4,065 crore worth of loans and also infuse about 1,700 crore worth of equity into Ruchi Soya. Now, remember that under the entire insolvency and bankruptcy process, the lenders in Ruchi Soya are conducting a Swiss auction, wherein Patanjali will be given an opportunity to challenge Adani's bid, and then Adani would have a right of first refusal, depending, of course, on the challenge itself. At the end of this process, a final bidder will be identified. The reason for a Swiss auction in the Ruchi Soya case is because in the past, just dealing with the highest bidder has resulted in some kind of litigation in court where the losing bidder challenges the lender's decision. So Swiss auction provides a more transparent solution to this problem. Also, of course, parallelly, there is another issue that is being worked out where Patanjali has raised complaints against Cyril Amachar and Mangaldas being appointed as the lender, as the lawyer for Adani Wilmar, as well as for the resolution professional in the case. According to Patanjali, this dual appointment is leading to some kind of conflict of interest, which has sullied the entire insolvency and bankruptcy process. Now, the lenders have already taken note of this letter, and they will be taking a decision whether a fresh round of bidding needs to be called in the case at all. And if that happens, then of course Patanjali will have another opportunity to make a fresh bid, a higher bid, possibly for Ruchi Soya under this entire process.
All right, let's head over now to Shraddha Babla, who's joining us with the stocks in news. Shraddha, what are the stocks on your list today?
Morning, Alex. Starting off with TCS, which has announced to the exchanges that they will be considering a buyback proposal on their board meeting, which is scheduled to be held on 15 June. In fact, the Times of India report says that the TCS may buy back shares worth about 10,000 crores. So that's one stock that we are going to be watching out for today. Another important stock is going to be Page Industries, where they've said that the license pact with Jockey has been extended till December 2040. So that's again good news for the company. Bharat Forge has acquired 35.3% stake in UK's Teva Motors for about £10 million. That's about 90 crores or so. You have an ET report which says that Edelweiss Financial Services is planning a $1.6 billion bad loan play for which Canada's CDPQ will invest about $600 million in a planned fund, and then local investors would invest another $300 million or so. Edelweiss is planning to close the fund by end of August. Now, do remember that this CPDQ investment is a part of that long-term strategic agreement that was signed when it picked up a 20% stake in Edelweiss's asset reconstruction company back in October 2016. So that's another one to watch out for. And again, Fortis Healthcare. Now, there's an ET report that says that the previous promoters of Fortis have moved funds via the arms investments, via some intercorporate deposits, etc. And there's also they're also saying that Radiant Lifecare has raised concerns over the limited due diligence slots that have been given for the bidding process. So again, Fortis will continue to be under the investor radar, but those are some of the names to watch out for.
Thanks so much for that, Shraddha. Let's move on and talk about the big brokerage calls of the day. Somit Sarkar is here to tell you all about a couple of them. Somit, you're going to talk about the big boy, I think, but first I think you're going to talk about KC International.
Yes, I'm first going to talk about KC International because it is an initiating coverage report. So Macquarie has initiated coverage on KC International with a buy rating and a target price of 454. Now, according to the brokerage, KC International is a play on railway electrification opportunity in India, with railway electrification picking up pace and nearly 38,000 kilometers of non-electrified tracks in India. The growth opportunity in this segment is strong for the next 4 to 5 years, according to the brokerage. Now, the brokerage is expecting railways to contribute nearly 20% to the total revenue of the company by FY21 from currently 8%. Also, the power and transmission distribution segment, where the company is heavily dependent now, this will go down going forward because the railways will increase its contribution to revenues going forward. Also, the brokerage is expecting the power T&D system to be stable over the next 2 to 3 years. Now, the brokerage is expecting KC International's return on equity to sustain at over 20% plus levels, while it expects its leverage to come down further going forward. Now, the company's revenue and net profit is expected to grow at a compounded annual growth rate of 13% and 21% over FY18 to FY21. Lastly, the brokerage says that the KEC deserves a premium to peers as there are multiple catalysts that are placed to drive growth for the company. Second, we have a City on Reliance Industries. Now, the brokerage has maintained its buy rating on the stock but has raised its target price to 1,180 from 1,150. Now, according to the brokerage, higher crude, weaker rupee are benefiting the company. Higher crude prices have improved the economics of companies' ethane imports and the petcoke gasification plant, and this improvement should lift the company's gross refining margin by close to $2 per barrel by FY 2021, according to the brokerage. Now, the brokerage is also expecting the next trigger point for the company to be the launch of its fiber to the home and the enterprise business segment. And the brokerage has raised its target price as it has hiked the EBITDA estimates for Reliance Industries by around 5 to 6% for FY 19 and FY 20. Lastly, Reliance is the top large cap pick in the oil and gas space and for City, and it also says that the current price provides an attractive opportunity point.
All right, thanks so much for that, Somit. There's several stories that you can find on the website. We've already talked about some of the news items that came in over the course of yesterday evening and going to trade today. You'll find all of that and more on the website, also the live market action. Here are just a couple of stories. Rana Kapoor has won shareholder approval for another term as Chief Executive Officer of Yes Bank. And Reliance Jio has said that it will offer more data on its existing tariff plans to counter Bharti Airtel's pricing. In a statement, the company said subscribers can avail of the scheme till the 30th of June. Now, a lot of you might have looked at the historic meeting between Donald Trump and Kim Jong-un that ended with a lot of promises but very few details. The two nations vowed to embark on a path of peace, with North Korea agreeing to full denuclearization of the Korean Peninsula in return for economic relief. The two leaders also signed a two-page document. However, no deadline was set to achieve these goals. Here's a quick look at all the takeaways from that summit in Singapore.
I want to thank Chairman Kim for taking the first bold step toward a bright new future for his people. Our unprecedented meeting, the first between an American president and a leader of North Korea, proves that real change is indeed possible. We're prepared to start a new history, and we're ready to write a new chapter between our nations.
We'll have to see how that pans out, but let's hope for the best. With that, it's done on DayBreak today, but up next is All You Need to Know, so do stay tuned. This is Bloomberg Quint.